Good afternoon. My name is Christian Kunz. I'm the head of Group Strategy and Innovation at the DIFC. I want to welcome all of you at the Dubai Sustainable Finance Working Group webinar hosted by DIFC, DFM, and Nasdaq Dubai together with the Dubai Sustainable Finance Working Group. Established in 2019 by DIFC and DFM, the group's role is to create the region's leading sustainable financial hub. It focuses on four pillars: responsible business operations, responsible investing, growing sustainable finance, and gender diversity and inclusion. The 16 strong members include leading sustainable companies, global and regional investment banks, exchanges, and institutions. Today, the group is launching two guides to support regional companies and the larger investment community on their sustainability journey. The two guides are the Dubai Sustainable Finance Working Group Sustainable Issuance Guide and the Dubai Sustainable Finance Working Group Sustainable Investing Guide. The webinar will kick off with two keynote speeches and then be followed by two exciting panel sessions explaining sustainable investing and sustainable issuance in more detail. With no further ado, I would like to introduce our first keynote speaker, Arif Amiri. He's the Chief Executive Officer of DIFC Authority. He oversees the strategic and operational functions of the center. Under his leadership, the center has grown substantially and set out an ambitious 2024 strategy, which will see it further enhance its position as the leading financial hub of the Middle East, Africa, and South Asia region. Mr. Amiri's vision for the DFC reflects the UAE's commitment to innovation and economic diversification. As part of this vision, DFC is further developing its fintech proposition and leading a number of initiatives to move towards an innovation agenda that covers the broader remit of the future of finance, which also includes ESG and sustainable finance. Before joining the DFC Authority, Mr. Amiri held a number of senior leadership positions at Emaar, HSBC Middle East, and he was the chairman of Middle East Investor Relations Society. Arif, over to you.
Christian, thank you so much for the kind introduction. Distinguished guests, ladies and gentlemen, good afternoon. On behalf of the Dubai International Financial Center and the Dubai Sustainable Finance Working Group, welcome to today's webinar. Today's webinar focuses on accelerating environment, social, and governance, and how best practice is emerging from Dubai relating to substantial sustainable investment and sustainable issuances. The strength and variety of speakers and attendees shows the progress being made across the finance industry here in Dubai. The DIFC and members of the working group are committed to providing the most enabling platform for sustainable investment and sustainable issuances across the region. The concept of being focused on ESG isn't new for us. We have been focused on it for a number of years. Clients and other stakeholders look up to us as thought leaders in this space. For the DIFC, ESG principles are fully integrated and considered in our laws, regulations, and operating model. These are what enable our clients to contribute to this growing sector. DIFC-based bankers, advisors, and professional services firms collaborate on preparing regional and global deals that have sustainable principles at their core. ESG bonds, sukuk, equities, issuance, and other financial products are developed within the DIFC. We have companies headquartered here who create value by investing in solutions that are focused on improving lives and prosperity. Businesses have sustainability strategies and positioning statements that determine what they will do and what they won't compromise on. Located in the DIFC, Nasdaq Dubai is the most prominent exchange in the region for green and other ESG listings, totaling $7.75 billion from 9 sukuks and conventional bonds. DFM and DIFC-owned Hawkama Corporate Governance Institute have helped to develop the S&P Hawkama UAE ESG Index of 20 sustainable UAE-listed companies. I'm also proud to say that S&P is also a DIFC client. Back in 2019, the DIFC issued a markets brief relating to the expectations for issuers of green bonds, which is being used in issuances today. And last year, the DFSA issued a discussion paper on championing sustainable finance in the center. Internationally, the center is represented in two leading groups: Network for Greening the Financial System and the Sustainable Insurance Forum. Work continues behind the scenes with the DFSA, the DIFC's independent regulator, to develop our ESG roadmap. This includes a virtual green or ESG hub, which is something our clients are also supporting. The roadmap supports our clients. 60% of them already consider ESG, impact investing, sustainable investing, and sustainable issuance in their business or investment decisions. They are part of socially responsible investing market that has grown by 200% in the last decade to almost $23 trillion in value. Our vast community of over 200 wealth and asset management firms can be a force for good in delivering impact investing solutions that deliver social and environment benefits, as well as, of course, financial return. I am very pleased to hear about the publishing of 2 guides by the Working Group on ESG and Sustainable Finance Principles. These will help educate our peers and next generation of financial professionals. The DIFC is also committed to advancing education on the subject. This is why the DIFC Academy recently entered into a partnership with Candriam Academy to offer the world's first free-to-access accredited training platform for sustainable and responsible investing. For many, the COVID-19 pandemic has also reinforced the growing need to support sustainable and responsible business practices. These can be developed through partnerships, technology, and without a doubt, innovation. I hope to see more businesses engage on this in the DIFC Innovation Hub, which provides the region's only fully comprehensive environment for financial services innovation. The case for accelerating integration of ESGs into financing, investing, and issuance is compelling. Today's webinar will reinforce this, and I'm looking forward to hearing more from our participants and how they are making progress, which is helping to shape the future of finance. Thank you for your attention, and thank you for your time.
Thank you very much, Arif. I would like to introduce the second keynote speaker, Maurice, Head of Sustainable Finance at the UN Global Compact. Maurice is responsible for its overall strategy and global implementation, focusing on developing innovative financial instruments to direct private finance towards critical sustainability solutions. Prior to her current role, she led the UN Environment Programme Finances Initiatives work in the US and Canada. Marie has more than 15 years of experience in global environmental and social issues and in the private, public, and not-for-profit sectors. Marie worked in senior sustainability roles at Barclays, Accenture, CSR Asia, the UK Department for Transport, and the WWF. It's great to have you today with us, Marie. Over to you.
Thank you very much for having me on this prestigious webinar. I'm looking forward to bringing a little bit of highlights on where the compact, the UN Global Compact that I work for, is working on sustainable finance, and give you a few trends on, sort of very much related to what Arif was saying on sustainable finance issuance over the last few months, specifically around the pandemic, but also most importantly, the work that we're currently doing with CFOs, and I'd love to perhaps have some of you joining after this. So I'm going to share my screen. I've got a few slides that I'd like to share, so I think you won't see me, but you'll hopefully hear my voice. Hope everyone can see correctly. Great. So the first slide that I wanted to highlight, or the first information I wanted to share with you, is really how we position. We've talked about ESG. I think probably most of you are familiar with that term. So it's environmental, social governance, The focus of the UN Global Compact, which is one of the leading sustainability network in the world. We've got more than 12,000 members who've joined us, and it's growing. So our focus is very much on the SDGs, so Sustainable Development Goals, and it's linked to the ESG. There's a lot of acronyms, but it's the two are really kind of looking at a broader roadmap for the world and how we can achieve sort of a reduction of inequalities and obviously reduction of climate change, CO2 and so on going forward. So the roadmap was issued in 2015. With only just 9 years to go, there's a strong need to continue around the financing. And this is really, for us, an investment opportunity. So the annual investment gap has been estimated at around 3 to 5 trillion every year for the next few years. So it's a substantial gap, but equally, we believe that the private sector has the means beyond the public contribution to actually contribute. And of course, lead the way in this space. So this is really around, sort of just to summarize, 2.5 sort of trillion in annual investment gap to achieve the SDGs by 2030. This will resonate hopefully with some of you, but as I was saying, what we've seen over the last, probably the last year, but even more before that, there's been an increase in sustainability-linked bond issuance for sure, so across sector, across geographies, and this is really for us a breakthrough, mostly because those instruments that we see, or those issuance, are actually linked to not just a project like a green bond can be, which is great, but actually linking this to the whole strategy of the company itself. So it's helping companies sort of transforming on a long-term basis. And that's also just to reiterate that point that not just, so that's more to give you a geographical breakdown of what's happening, but this increase in insurance, by 68% just last year, obviously, so we're going to see more of that, and this is what we're encouraging with the group of CFOs that I'm working with at the moment. So I know I don't have a huge amount of time, just want to kind of highlight a little bit about the initiative that I've mentioned, which is the Cfo Task Force, and the sets of principles that we've issued a few months ago that will help you, I think, and guiding you through this. So the Cfo Task Force for the SDGs, but essentially, sort of really pushing for ESG. It's all part of the same. It's really kind of, getting businesses to align sustainably and future-proofing their business in the long term. Was launched in September 2019. Under the direct mandate of the DSG, the Deputy Secretary General of the UN, MENA Mohamed, who you can see on this picture, is a strong group of CEO and CFOs coming together from different sectors, thinking about how can we leverage corporate, finance specifically. How do we see, sort of companies as investors themselves to kind of shift capital towards the SDGs and sustainability. So this is how, sort of it was set up and started a bit more than a year ago. Just to give you a feel for the members that are now part of the task force, so you'll recognize some brands, I'm sure. Others are maybe less familiar. You might be less familiar with. We're working with large multinational corporates across regions, and that's already changed because we've now got 50 members, and it's growing every day. But to really kind of, I guess, the collective action that we can drive from this group is phenomenal, and overall, we're looking at a collective market cap of now more than $2 trillion. So that's really, the push that we're kind of leveraging here, including not just corporates but also investors and credit rating agencies. So it's bringing those actors at the table, and I hope we can bring some of you too. And just the final thing I wanted to highlight, which might be interesting, and this is all available on our website, so feel free to download it. When we started this task force, this group of CFOs together, one of the thinking that we got started was, how can we actually sort of create a common language for CFOs to help them maneuver internally and really kind of start thinking about sort of the steps that a CFO can take to align sort of investments with the SDGs and ESG internally. So the logos that you saw on the other slide is the group of CFOs that came together and created this sets of principles, which is really kind of focusing on defining the strategy of the company around this. So the impact thesis, it's also looking at the types of financial instruments. So for example, we've talked about sustainability bonds, but AB InBev just issued a credit revolving facility sort of last week, which is going to be linked to the strategy and the business. So we're going to see a lot more of that, and they're working with us as well. And the third aspect is, how do you report and communicate, sort of back to your investors? So obviously, investors are key, and I'm sure some of you are here today as well from that sort of perspective as well. So that's all I'm going to say. And I want to obviously thank you for giving us the opportunity to highlight one, sort of the trends that I think are here to stay, looking at sustainable financing and how that's actually growing, and then the opportunity for further investments from a corporate standpoint, and then some of the tools that the UN Global Compact provides to its member, such as that set of principles, but which now translated into actual working groups, expert working groups of companies working together and implementing those principles within their own businesses. So I look forward to hearing this discussion. For me, it's always this is the best part of my job, is kind of understanding what's actually happening at a regional and local level, and how this work can be localized and how we can work together, providing that kind of global umbrella. But ultimately, it's about sort of localizing at this level. So I'm looking forward to the conversation. Thank you so much for having us, presenting today. And back to Christian, I think.
Thank you very much, Marie. This is very insightful. Thanks for sharing the global perspective. And yes, we're very excited now to deep dive in the regional perspective into the conversation. So we're starting with the first panel discussion. It is on ESG investment strategies explained, increasing shift towards ESG compliance, creating commercial opportunities for investors in the region. The moderator will be Rehan Ahmed, Director, Investment Banking, Capital Markets at ENBD. Over to you.
Well, thank you very much, Christian. Thank you very much, Christian. Good afternoon, everyone, and a very warm welcome indeed to this first panel discussion on... Sorry, can everybody hear me?
Yes.
Yes.
Sorry, thank you. So thank you very much, Christian. A very warm welcome indeed to this first panel discussion on sustainable investments. I hope you're enjoying the webinar so far, and that, like me, you're looking forward to a stimulating and thought-provoking discussion with the esteemed panel that I have for you today. Before introducing the panel, I just wanted to remind you to download the Sustainable Investing Guide. It contains a lot of useful information on the topics we will discuss, so please encourage you to do so. So firstly, on to our panel. So we have an esteemed panel of three. Firstly, we have Sandra Carlisle, who is Head of Responsible Investment Specialist at HSBC Asset Management, whom is joining us from London. With her, we have Maurice, who is Chief Investment Officer at Emirates NBD Bank. And last but not least, we have Frank Nowak, who is Vice President and Research Analyst from Franklin Templeton Fixed Income in Dubai. With the introductions out of the way, let's jump into our first question. It's fair to say that sustainable investing is a bit of an umbrella term. So maybe it would help frame our discussion if I could begin by asking each of you to please provide your definition of sustainable investing, and also please elaborate on why it's important as well, please. And I'll open that to the panel.
Can I start maybe?
Certainly.
Yeah, I was not sure if I was heard. Thank you very much for having me, and thank you for the question. Well, sustainable investing, it's first a definition. We could have very large definition, but I would say very simply that an investment is sustainable if it is first financially sound, an issuer which is solvent, a business which has high quality attributes, which is well run. And second, and that's probably the most important for the topic of today, an investment is sustainable if the business doesn't borrow returns from the future. It's not postponing the problem, doesn't borrow return by damaging our environment. Of course, it's the E, by being extracting too much return from the stakeholders, should they be the suppliers, the employees, and of course the shareholders, and that's probably the G, and to the entire society. So I think with this kind of two bits, being financially sound with good business attributes and not borrowing returns from the future, from the environment, the social, and the governance, we have a sustainable investment. Why is it important? Well, I'm doing wealth management. So wealth management by nature, we transport capital over time for our clients, very often from one generation to another. So it's not just about the capital that you send in the future. It's also about the state of the world that will be in this future world. You don't want the next generation to inherit your money in a devastated world. So that's why it's absolutely quintessential to what we do.
Thank you very much, Maurice. That was very, very helpful and comprehensive. Frank, is there anything you'd like to add to what Maurice has said?
Sure, Rayan. Hi to everyone. Thanks for the invitation and the honor to be present. I hope everyone is safe and well. I wanted to do ladies first, but I think we've taken the stage with Maurice, so I'll go ahead. And really, to the core, investment, ESG investment is, for us, an investment process where environmental, social, and governance issues factors would be integrated into the process of asset allocation and ultimately portfolio allocation. As Maurice mentioned and the previous panelists mentioned, it covers a wide range of reality that goes from responsible investing. But we at Franklin Templeton, who have been integrating ESG consideration into our investment processes for a very long time, and we do offer thematic and specialized strategies, be it from an impact perspective or ESG theme or even value driven type of strategies. And I want to make a special mention of the Global Sukuk Fund, for example, that we run out of Dubai. That would be one example. The ESG philosophy that we adopt is really one of integration into all investment processes that we run. So this is not only for the dedicated strategy, which are in place and have quite high demand, but really the philosophy behind the process we're running, which is quite research intensive and bottom up, is really one of integration into all part of the investment process, with the belief that we need to get a full, comprehensive, holistic vision, be it of an equity investment or a bond investment. And those ESG soft factors are increasingly needed to get to that assessment in a comprehensive manner. And risk-adjusted return is obviously the end goal. So for us, it's about integration. We also are being way more active in engagement with issuers. So I think the DFM initiative, the guide is very topical and timely in that this is an effort we've been running with our investment universe. And you ask, why do we think it's important? So first of all, it's important for us as investment manager because there's a demand. I think we can throw some numbers later through the panel. Maybe I don't do that now. And we have also to address an increasing demand on transparency on the investment manager side as to how we integrate, use, and ultimately factor in all of the ESG consideration into our investments. We've heard from the previous panel, we do believe that for government entities, regulator, which in the region have been making extremely good progress on sustainability development goals. But once those goals are set, it's all about implementation. So, making sure the whole ecosystem and all financial market participants, be it investors, issuers, regulator, it's quite key that this mentality and those goals trickle down to all stakeholders to be effectively implemented. And the last point I will make, I think it's also increasingly important for not only us provider of capital, but for existing and potential issuer, be it equity or debt capital market. We do believe early adopters and corporates, banks, whatever you can think of that can integrate and articulate a very coherent ESG strategy will have first a key advantage, and probably that's one of the key way to ensure the cost of funding is optimized.
Well, thank you very much, Frank. That was a very comprehensive answer. Sandra, just wanted to ask whether there was anything else you wanted to add to either what Maurice or Frank has said. Sandra? Perhaps we're having some technical difficulties there. So whilst we're waiting to get Sandra back with us, perhaps if I could ask the next question on the panel. So Frank, if I could ask you, what do you think is driving sustainable investing? I mean, is this just due to global investors trying to placate regulators? Or are investors really seeing value in sustainability and ESG from a commercial perspective?
Sure. Rayan, do you want me to go ahead now because I see Sandra's back?
Yeah, please go ahead. We'll come back to Sandra.
Okay, sure. Well, yeah, I think it's multiple angles, definitely, and I think in the way you phrase the question. Is it submitting to regulatory pressure in a way, or trying to adhere or stick to it? I think it goes beyond that. First of all, it's very obvious that climate change, sustainability theme across the developed market world and the policies and the way they're shaped. These themes is not going away. The pressure on disclosure and articulating what you do within your investment process. And I'm sure the audience that's going to go through the guide, I think there's a very good summary of when it comes to disclosure for investment managers and what regulation might adhere to is wide and varied, but this is only increasing, right? So we need to be prepared. The type of sustainable investment that are coming from government spending, and we know how important government spending and how intricate governments are within the business world of the broader Middle East. So all of those ingredients to say that anything that comes from regulation needs to be addressed and taken seriously, and the people who are going to be ready to address those are going to have a first mover advantage. If you look at what happened to the ecosystem of sustainable investments in more developed markets, so I think Europe is a prime example. You'll see that governments and associated regulation have led all the way from issuances to putting in place a backdrop that allows this investment to flourish and being nourished. So those government entities are a very important role to play in nurturing this whole ecosystem. That's on the regulation side. So short answer, very important. It's not going away, and you will need to adhere to it one way or the other, irrespective of the location you find yourself in as an investment manager. That's one. Second, it's hard to ignore that the demand is growing. So I think Marie in the previous panel showed very clearly the momentum that issuances have had. Over 500 billion. It's quite a massive amount, but that's the flow. You have also flows into dedicated strategies, and I think last year was a record year. We touched 350 billion that flew into ESG labels. I think there are great numbers in the guide that will show you that in excess of 30 trillion globally is related to ESG and sustainable investment assets. So, this is part of addressing a demand, and I think for us this is coming from all over the place. So from retail and institutional investors. Retail investors have their demand, and we see in practice an increasing fair demand from our institutional investors, which don't invest in specialized strategies to demonstrate. And again, it's about how we integrate those ESG topics, how we demonstrate that they had value to the investment process, which is one thing we believe in. And ultimately, how you influence how you influence through your engagement to make sure the dynamic stays and that you can demonstrate your added value in risk-adjusted return.
Thank you. Thank you very much, Frank. That's very comprehensive again. Just opening it up to Maurice and Sandra. So the question being, it's sustainable investing, regulatory imperative or commercial reality? What's your take?
Thank you, Maurice, and thank you everyone, and apologies that my system is not working. I'm now on my home system, as you can probably see. I agree with everything Frank said. If you look before the GFC, there was really no regulation or policy making around what we call ESG. Since the GFC, we've seen something like 450 individual pieces of policy making or regulation, mostly around climate issues and corporate governance. So for example, the emergence of stewardship codes, which govern how investors look after their assets and set up practices for good behavior, for interaction between managers, asset owners, and the companies in which they're investing. Since 2018 alone, that pace of regulatory change is quickening. So we've seen over 150 regulatory interventions since 2018 alone. So the regulatory imperative is really clear. And it's worth also thinking, after great crises, regulation and policy making comes. So the crash of 29, we got accounting standards, the GFC in 2007, 2008, we got banking regulation and solvency charges that were much more constraining. So I fully expect post-COVID, we're going to see a lot more around ESG regulation and policy making, mix of hard and soft law. And that's because we understand much more, to Frank's point, the way in which E, S, the people, the planet, and profit have to interact. So the commercial imperative is also clear. Funds are flowing. Frank gave the number, and those are in this excellent guide. But it's also because of a societal shift. Whichever generation we look at, it's not just young people and next gen. Investors are asking questions about how their money is managed, what their money is doing. And that is leading to both the creation of specific ESG thematic strategies, but also the idea of research and analysis for all assets that look at ESG. And maybe something for the region, which I think is really interesting that we're seeing at HSBC Global Asset Management is investors are very comfortable now aligning their investments with their beliefs. And one example of that is the upsurge that we have seen in terms of demand for Sharia compliant investing. In the last year alone, we've seen the funds that we have invested in this way double, and it's increasing all the time. So beliefs, whether those are social beliefs or faith beliefs or environmental beliefs, are issues that investors are increasingly comfortable about bringing into investment. And that is also quite a big change in the industry from where we were 10 or 15 years ago. So I'll pause there and let Maurice make some comments. Thank you.
Thank you, Sandra.
Sorry,
Maurice?
I was on mute. Yeah, I will just add. I think that time flies. I fully agree with everything that's been said, especially the role of regulation, which is not just, pushing the standards, but also making this extra financial risk becoming financial. It's also about the materiality. It's also the role of regulation. And I was just thinking that we shouldn't forget also that the most important thing for an investment fund is to be a relevant investment. I mean, we have to prove and collectively asset managers, wealth managers, that it works. It's like an electric car. An electric car has first to be a good car. Then it's even better if it's electric and if it's good for the environment. It's exactly the same for any ESG fund. It has first to be compelling in terms of risk-adjusted return. And there are good news. For me, the best global equity fund in the world is run by Generation. It is sustainable for 20 years, something like that. Amazing track record. There are also bad things sometimes, and we have to say it. You have some asset managers who are like benchmark huggers and who suddenly see that, oh, I will paint myself in green and I will keep on charging high fees and say, hey, don't worry for the performance. It's not the topic. It's not us. It's CSC data. So I'm very happy to hear that at HSBC and Franklin Templeton, you're talking about true conviction. And I think that we have to build this track record. I mean, the ball is also in our court for that.
Thank you, Maurice. It's fair to say that it's a bit of both playing in there. Sandra, the next question, if I could have you start. So it's fair to say that the last 12 months have been eventful, to say the least. Could I ask you to comment on what impact that has had on sustainable investing by asset managers such as yourself and other investors, both globally and from a regional perspective? I mean, in a nutshell, what I'm asking is, has the COVID-19 pandemic accelerated or derailed the sustainable investment landscape?
Yep. And that's a really good question. I think if you'd asked this question in February 2020, we'd have said derailed. But what's been very clear in February 21 is accelerated. And I think that is for a number of reasons. I mentioned the changing societal views. We all understand that we live on a fragile planet and we have to solve the climate crisis. It's Dr. Mark Carney says very clearly, it's the greatest crisis we face. But it's also one of the greatest opportunities we face. And it's very clear that capital is flowing and wants to flow into solutions to address the challenge that we're facing around our climate. I think the other way that the pandemic has accelerated the shift is that we've all realized it's not just the E in ESG. The E and the S are incredibly closely linked. So we're taking, Maurice mentioned, the importance of return, which we all stand behind, and the importance of a holistic view of an asset, how a company is doing, what an issuer is doing, what the real opportunity is, what the real risks are. So I think there's a greater understanding of the way in which E and S interconnect and the way in which companies manage these E, S, and G issues. affects the underlying cash flow generation and profitability of their businesses. And I fully expect the accelerating trend to continue. It'll be different in all territories, in all countries, in all regions. But the clear trend driving sustainable investment is an acceleration, not a deceleration. Thank you.
Thank you, Sandra. Maurice, Frank, anything you'd want to add to that? Is that a thought you would share?
No, I mean, definitely I can only echo. I mean, we've seen, with the rescue packages that have been across the world and the way, the main economies and the emerging market economies want to restart the economy. I think the green climate change social tones have been only more prevalent. So I think it probably had like a great multiplier effect. And I think we see it in the region, how, the ESG themes have, from the government regionally, been married to diversifying away from oil. And what greater way of doing this than having a strong ESG angle and adopting the sustainability goal at the same time. So from a policy making perspective, it makes a lot of sense. There are certainly some flaws in the region in terms of transparency, reporting, but all the evolution we've seen is only to the better. And it's probably good to start from a low point and only improve and start with best practices, such as like this exercise is doing and kickstarting, give us hope for the future, because we often say to issuers we discuss with that yes, ESG to parlay as a cost, but we do think that the opportunity cost of not doing it down the road is so much greater, and or investment processes like the ones we have that are really research intensive and engagement is not going away. Those themes are not going away. The flows across the world are not getting away from those themes. So the earlier adopter would be the better positioned.
Thank you very much, Frank. Maurice, anything to add?
No, frankly, I couldn't agree more. Of course, this kind of crisis, reminds you what is really important. We are living fascinating times. It's not just about this pandemic, but also everything that has accelerated in terms of response. And I was thinking that we have big questions. The level of public debt, for example, which has been raised. There was no choice. You had to spend to support the economy and to support people. No question. But to what extent is it about having the future generations paying for what's happening now? You have true questions that come now. And I think that all these questions, they don't find easy answers, but they converge to the idea that we have to see for the long term, which back to investment means taking into account these extra financial criteria more and more. And I agree, being totally integrated to everything we think about. You're on mute, Ryan.
Sorry. Thank you very much, Maurice. That's a very positive message. COVID as a force for change for the better. So if I could move on to the next question, Maurice. Recently, we've seen Larry Fink, who is the CEO, as we know, of BlackRock, the world's largest investor, stated in his annual letter that BlackRock will start pushing companies to disclose their plans both for net zero and eliminating greenhouse gases by 2050. What do you think this will mean for companies both globally and regionally regarding sustainability in their business strategies going forwards?
Well, first, it's obviously a very good news, because when the world's largest asset manager speaks, management from listed companies listen, and so of course it's a very good news. The interesting thing is that asset managers are not alone to have a voice, because typically in the case of BlackRock, I might be wrong, but I think that out of this 9 trillion of assets, probably 6 are tracking indices. So it means that at the end, whatever BlackRock, which is a fantastic company, says, they will buy companies which are in the index. And it means that the index providers, the stock exchanges, all the ecosystem has a responsibility, because at the end, if 6 trillion out of these 9 are invested in anything that is part of the index is more important. And that's why I'm so happy to have this webinar today with all the kind of stakeholders being involved. Of course, companies will do that, but frankly, I would prefer to see companies doing this because it's good than doing this because BlackRock asked for it. Don't get me wrong, it's a very good thing that BlackRock asks for it, but even in our region, I think, correct me if I'm wrong, but that the first company which has set up a plan to be carbon neutral is not listed. It's Majid Al Futtaim, I think. I might be wrong, and I like this kind of initiative. So for all companies, they are getting there, because as Sandra was saying, it's also what people want. And when I say people, it's not just investors; it's also their clients. You know, at the end of the day, they want to have the environment, and especially, yeah, maybe I will end up with that. And as Sandra was saying, many people make a shortcut between ESG, sustainability, and the environment. And of course, it's something that is understandable immediately for all of us. But I think that there is much more. You know, the corporate governance is something in terms of data that's the most material criteria when it comes to providing better risk-adjusted return. It works a bit more on the risk, and you have the same return, so it's better. The governance matters, and I think that for BlackRock, typically, there are probably low-hanging fruits over there, because maybe, I mean, committing to be carbon neutral in 2050, it's fantastic, but 2050 is far, and you have also these other parts. I agree, climate crisis is the largest. It's the elephant in the room, and we have to address it. It's so crucial, but the rest matters as well. And I hope, and I'm sure that that my co-panelists at HSBC and Franklin Templeton, as they say, they are engaging, which is very difficult to do for an individual investors. These asset managers, you can do that, and you can tell them, hey, by the way, about governance, where are you in terms of, I don't know, gender equality, any other topic that could be, I think, sometimes a quick win over this long-term topic that I think all the companies will go through, because anyway, their clients want them to go there, and themselves, they know what to do. Don't know if I replied to your question.
No, it's clear. So an important push, but something that's already happening as well. No, that was very clear. Thank you, Maurice. Sandra, Frank, is there anything else you'd want to add to that?
No, I mean, we can only echo what Maurice said. And, I think his point was very important, that, sometimes the mind is blurred between, climate actions and specialized strategies or thematic strategies that are really designed for certain topics. But I think I would agree that, for us, it's about capturing ESG in the broader sense of the way for integrating into the investment processes. So which is why lately, we've done a lot of effort internally of not only using external data, so, the MSCI, Sustainalytics of the world, etc., but we've developed, in-house tools for, corporate investments, for equity investments, we have a global sovereign database, with like close to 70 factors to see how each country fares on not only the E, but S and the G as well, which are extremely key consideration when it comes for us to generate alpha and reinforcing on or internal conviction, because at the end of the day, that's what we paid for. Is about research-driven processes. So yes, let's not forget those topics, which are extremely relevant to the region as well. As we are making progress, we're extremely optimistic for the future, but there are some lack of basic data, of basic engagement, that we see is getting plugged, and on which, you know, we would totally agree. There are so many low-hanging fruits that you know, efforts can try to bridge the gap quickly and adopt best practices. So again, you know, this initiative that we're talking about today is so important. So optimism, but yeah, realistic at the same time.
Actually, I think there are a couple of different points, and Franck set it up for me quite nicely, so thank you, because he mentioned not just the equity market, which is of course where ESG started, but also fixed income. And I think there is a lot more that can be done. So it is absolutely, you know, what BlackRock is doing, as you say, when the largest asset manager in the world speaks, the market broadly is going to listen. But the bond market is bigger than BlackRock, and the bond market is bigger than the equity market. So what I would really like to see is not just engagement with credit, you know, issuers in the credit markets, and indeed sovereigns where possible, as Franck mentioned. But I really want to see how pricing for issuers moves in the debt markets, because whilst we have a green bond market, it's pretty small. It's 2% of the global fixed income market, you know, roughly. And we haven't yet worked out, or the bond market hasn't yet worked out, how it's going to start to price debt issuance from issuers across sectors, aligned with their ESG positioning. So there's an awful lot of very, very good work being done. There's a lot more we can do in the fixed income markets. And once those move in a convincing way, the effect will be much greater than the effect of a Larry Fink annual BlackRock letter. So let's be very thoughtful about how we can, as investors, influence the bond markets to take ESG across the piece much more seriously and think about it systematically. Thank you.
Thank you very much, Sandra. So before we move on to the Q&A, I'm conscious, Sandra, I didn't give you the opportunity to provide your definition of sustainable investments. So whilst we've got a couple of minutes, perhaps I should open the floor over to you.
Oh, well, thank you so much. You know, I look back at the classic Brundtland definition. It's meeting the needs. Sustainable development is meeting the needs of today, not compromising those of tomorrow, so future generations. So it is really all about thinking how the investments we're making in companies is going to make them on the right side of the future with future-proof business models, or on the wrong side of the future with backward-looking or redundant business models. And again, in a climate sense, I'm going to come back to what Mark Carney says, because he talks about being on the right side of climate history. And that doesn't mean we neglect the wider S and the G, of course we don't. And he talks about climate roadkill, and we do not want to be investing in climate roadkill. We want to be future-proofing our portfolios for our investors so that they can be financially secure, but also enjoy the world that they're living in. That's what it means to us. Thank you.
Thank you very much, Sandra. So that concludes the panel questions. I'm going to now move over to some of the questions that have come through during the session. So I'll ask this to the panel generally, but oh, this looks like a good one. So looking out further beyond the next few years, to what extent do you see sustainable investment becoming the new normal, not only globally, but also in this region in particular, which has been heavily dominated by the fossil fuel industry historically? So I'll open that to the panel.
I can start maybe on a, well, from my point of view, from a general point of view, there's no question it's becoming the new normal. And I think the same conversation 20 years ago, you would have had maybe 3 people, not 0, but you would have had pioneers, and now we have hundreds, and it's only the beginning. I have absolutely no doubt that all the history makes it the new normal. With the link with the fossil fuel industry, I think it's a fascinating question. And again, very often people think ESG environment equals environments, which means that, oh, fossil fuel is bad. I'm not at all in that camp. I think the region proves that you can manage a transition. And let me be clear, if we stop fossil fuel now, yes, it's very good for the climate, but the world will go back to the Middle Age, and life expectation will go down, and it's going to be a nightmare. So for me, I would take the example, and it's kind of a personal view, but when I see that Saudi Arabia, like before, they used to use the revenues of oil to subsidize the population without really a future, and now they are taking the value, the wealth of Saudi Aramco to transform the country and give really new perspective to the new jobs, new everything to the population. I think that it is a way to do something sustainable with a fossil fuel. And of course, we know that it's going to be over in 50 years or whatever. And we need to switch to something else, but swiftly. And I think the region is absolutely fantastic to that extent. Yes, we have oil, but we also have the largest solar panel facilities in the world. And it's just to say, just again, it's not just environment, but I think this region understands really what is sustainability.
Just quickly, 2 things really. One is, depends on what you, again, put under the theme sustainable. But I think this is the new normal as of now. Everybody is looking at ESG on the investment management side. I can think of anyone that wouldn't. And the integration into even non-thematic strategies is there already. So, you know, the new normal is already there. The second thing is, it's often one of the misconceptions that we have when we start to engage, and especially with bond issuers. So I think Sandra was very right to distinguish equity, so public company that are used to reporting, that are used to communicating to investors, that are used to, you know, presenting their strategies, that are used to, you know, showing what they do on the ESG front, and the bond world, which, you know, doesn't start at the same level of disclosures and engagement with the end investors. But I will say is, no matter where you stand, there's always something you can do. You know, even if you have the worst product in the world, you could still have the best ESG strategy from your seat. And that's going to be a tremendous differentiating factor from your neighbor that has the same product, but is not doing anything, is not releasing anything, is not communicating anything. So, you know, obviously some industries would be more prone to extremely good ESG standing versus others, but that's not a reason, you know, not to engage, not to define a strategy, not to make sure you've addressed everything that you could do. Because that reminds me of, you know, in the previous life, I was with rating agencies when I came to the region, and, you know, having a high yield rating was almost like insulting your father and your mother, right? And that's not the case. You know, you could be a high yield rating that's transitioning to an investment grade rating, and, you know, give your potential investor a fantastic story to lay back on. You know, you could have a company or a bank or whatever you can think that starts from a low point, but has a great strategy to improve. So that's why I think, you know, ESG is not, you know, point in time and static. It's really evolving. It's really about, and that's why we do this engagement, is to trigger the dialogue, you know, make issuers see the benefit of engaging and the mutual benefit, really.
So I would go back to what Maurice said. We all talked earlier about different ways of implementing ESG. Some is, as I said, very beliefs driven, and that could be a belief that fossil fuels are not appropriate in an investor's portfolio. And that's absolutely fine. if the investor is prepared to understand the investment consequences of taking industries that are, as Maurice rightly said, systemic, and it's not just driving your car or gas for power. It's also your plastic lunchbox. It's hundreds of things sitting in my office around me. So it is a transition, and we need to acknowledge that. And I think we also need to acknowledge a different issue, which Maurice touched on, which is every country in the world is facing a demographic challenge. For those of us in countries like the UK, where I'm based, it's a rapidly aging population. For those of you based in the region, it may be a rapidly growing and young population, but there is a demographic transformation. And I think that one of the key things for those of you in the industry, which fascinates me, is both the innovation we can see from the outside, the understanding that this transition needs to happen, and there are assets that we've never thought about, capturing the sun's rays for energy. Wow, in the region, lots of excellent transformation going on. But also that wealth that's come from the fossil fuel industry, in the way that we've seen with the Norwegians, by the way, in their sovereign wealth fund. That's transformative wealth potential that can be deployed in education, healthcare, job creation, infrastructure building. So don't feel that this is the legacy that you should feel guilty about, or that's somehow bad or wrong or not for the future, but think about the transformative power and wealth creation in the broader sense that can come from that resource that uniquely, or not uniquely, but that exists within your region. So I think that's a really positive message, that so much transformation is happening, and that's a real something for all of us outside the region to look at and be thoughtful about. Thank you.
Thank you very much, Sandra, and also to Frank and Maurice. I think we are out of time now, so I think that's a good point in which to conclude the session. So I'd like to conclude by thanking the panel for their valuable insights, and also to the audience as well for their participation. We certainly hope that you found this to be a very, very useful and informative session. Thank you.
Thank you very much to the entire panel, and thanks to you, Rehan. This was very insightful. Indeed, I think we can continue the conversation for many, many hours. So thanks a lot, but we have another very exciting topic, and I think as much to learn and to discuss. So the next panel is on sustainable issuance explained, increasing incorporation of ESG as an advantageous business strategy for growth. I'd like to invite the moderator of the panel, Tahir Mahmood, Deputy Division Head of Business Development at Dubai Financial Markets and Nasdaq Dubai. Over to you, Tahir.
Thank you, Christian. Ladies and gentlemen, good afternoon. And once again, thank you for joining us on this webinar. One of the reports launched today is the Sustainable Issuance Guide, which highlights the growth of sustainable issuances in the region and globally. It provides an overview and roadmap of sustainable finance products and looks at future trends in sustainable finance. And we'll be discussing some of these items on this panel today. Please do share your questions with us, and we'll try to address them at the end of this discussion. Joining me are three gentlemen who have been involved in sustainable finance from different perspectives. Ibrahim Al-Zubi is the Chief Sustainability Officer at Majid Al Futtaim Holding. From the Sustainable Finance team of Standard Chartered Bank, we have Oliver Phillips. And our third panelist is Ridwan Ahmed, who heads Investor Relations at DP World. Thank you all for joining me. So we've seen ESG-related issuances increase year on year. The report states that sustainable issuances exceeded $534 billion in 2020, representing close to 80% increase compared to 2019. I want to start with hearing from the panelists what sustainability and sustainable finance means for their business. DP World is one of the largest port operators in the world, and with such huge infrastructures, I'm sure ESG is of high importance. With one, you're responsible for the high level of value that DP World brings to its shareholder and investors. How does ESG and sustainability relate to DP World's operations?
Hi, Tahir, and thank you for the introduction. I think, look, it's been very interesting for me personally as well, being head of IR at DP World, because I think I've seen this growth and kind of the interest in the financial markets over the last, I would say, 5 years in ESG. But as a company that's kind of in the ocean, effectively building ports, the ESG factor has always been very, very important to us, really. And so I think we've always been in good shape when this kind of demand came along, really. So for us, kind of having the right training, safety development, kind of the kind of care of the ocean, all of these factors have been very, very relevant for us. And being a listed company, the whole corporate governance side of things as well has been kind of a key priority for us, really. So I think as a corporate, we've been involved in ESG or taking this very seriously for a long time. But on the financing side, also as a corporate, we try to access different pools of capital. So we're in the equity markets, we're in various kind of debt instruments, really. So for us, I think this is another form of financing, which actually also helps us as a corporate develop our ESG. So for example, I think we can talk about this more later, but we have a revolving facility where our lending rates are improved if we meet certain ESG targets. So that's a very holistic approach, because we can go to each segment of our business and say, look, guys, if we focus and deliver on our targets, actually the cost of borrowing for us is lower as well. So it's yeah, I think we're trying to take a holistic approach to this, and we are making progress.
Excellent. And Ibrahim, you oversee Majid Al Futhaim's sustainability strategy at group level. And not only are you the vice chair of the corporate advisory board of the World Green Building Council and the UN Global Compact UAE network, you're also working with the World Economic Forum. So you're deeply involved with ESG. As one of the leading mall operators, how important is ESG for Majid Al Futhaim?
Thank you very much, Tahir, and hope everyone is well and safe. And it's a pleasure to be part of this panel. First of all, I would like to thank Maurice for mentioning us. He's correct. We're not only targeting net carbon neutral, but also we're targeting net positive. Just to take people into the new perspective. And I will start with a quote of the new Director General of WTO when she mentioned that in her first tweet to the global trade leaders that forget business as usual. And I think in our discussions from now on, we should forget business as usual. COVID-19 has shown how vulnerable and fragile our nations are. In a matter of months, we've seen change of livelihood, people losing jobs. And actually, the projection of people living in extreme poverty could increase by 420 million people. So the new era, or the post-COVID-19, is relying a lot on sustainable finance. What sustainable finance for us is a joint up approach to financial products and services that integrates environmental, social, and governance, ESG, criteria into decision-making, policy frameworks, and practices. It's about reducing financial gaps to solve major and global problems. And that's the responsibility, by the way, of a major stakeholder like the private sector. I believe that in the next, are we living in the near future will be 7 trends in sustainable financing will transform the future landscape of ESG in the corporate sector and investments, as well as regulations and even governments in emerging markets. So emerging markets post-COVID-19 need to start investing in resilient infrastructure. And to do that, sustainable finance is a tool. We will see a trend of increased commitment to address climate change. And we've seen this in a global level. We've seen change of US administration, the first thing back to Paris Agreement, We have a climate change envoy in the UAE. People talk Green Deal, Green Comeback for post-COVID-19. So we've seen a lot of this, and that's a fact. The second one is the intensified interest in the importance of ESG investments and disclosure. I was involved in meeting lots of investors in our 2 rounds of the world's first green sukuk. The investors are interested, not because they are only interested in ESG, but also there is a demand from their main stakeholders. So there is a quest, people do ask questions. Third one, we need to start minding the gaps through innovative financing. So conventional financing may not exist post-COVID-19, hence sustainable financing can be and should be one of the tools. We've seen also banks stepping up to sustainability-linked loans, green loans. So we as a corporate, as Majd Al-Futtaim, we are witnessing that as well, and we want to tap on such things. Also, the data is the new oil. We talked about fossil fuel. Data is the new oil, and there's a huge quest of data and digital. And believe it or not, you talked about Larry Fink's annual letter. We believe, in my annual letter, and Majd Al-Futtaim, we believe sustainability can be the new digital, and that's also another fact. The sixth trend is the quest for taxonomies, regulations, and legislations. We've seen changes of these. We've seen progressive regulations. Last but not least, refocusing sustainable financing post-COVID-19. And that's the umbrella of all the trends I've mentioned. So in Majd Al-Futtaim, we look at it as a backbone of our vision and mission, the backbone of our next 20 to 25 years. It's in the core of what we do, either being climate change and climate action commitment and doers, as well as looking at even other parts other than climate change, like the circular economy. So it's been working well, and we're still at the beginning, but this is how we look at sustainable financing.
Very good, thank you. And we'll speak about the products both Ridwan and yourself have mentioned, and you know, the investor demand. But before that, moving on to Oliver, you've been with Standard Chartered's sustainable finance team since it started here in Dubai. In your role, you work with different types of businesses, and you played a key role in working with the team to create the Sustainable Issuance Guide. What are you seeing in the market, and are there particular sectors focusing more on this ESG and sustainable finance compared to others?
Well, thank you, Tahir. And first of all, I want to just thank everybody else who I worked with at DFM and NASDAQ Dubai to put together these guides. And you know, the HSBC and ENBD team as well for the investing one. I think these are 2 really great documents that, for anybody interested in understanding more about the technical detail that goes into both sustainable investing and sustainable issuance, they're really good reads to go through. And I hope you find them useful. I think going to the sustainable finance market, the one thing that probably surprised everybody is how much it accelerated last year, despite COVID. When COVID happened, I think there's a lot of concerns that it could derail this sort of green revolution that we've been seeing, but that was very much not the case. And in fact, what we saw was that the market accelerated, but also it evolved. And it was really, for me, the story of green goes rainbow. And what I mean by that is we didn't just see the green kind of climate financing, renewables type stuff that we've been seeing a lot of over the last few years, but we saw the rest of the spectrum, particularly social and sustainability, and that means a mixture of green and social in the same instrument. We saw those 2 areas accelerate incredibly, going to almost 50% of total issuance on the bond side that had some sort of social angle to it, up from just under 20% the previous year. So a massive, massive increase. But we also saw, and an area that I think we're going to see a lot more of in the next year and coming years, the emergence of this transition theme. And what this is you're somewhere between brown and green, showing that movement to being more sustainable, to being more climate friendly. And I think that's going to be the area that we see a lot more growth in. And we actually were very fortunate to pioneer that in the region with the first ever transition sustainability linked sukuk that Etihad Airways issued in the latter part of the year. First of its kind for the region and for the sector. But what was most interesting about that is it's one of the first transactions where we saw a combination, well, in fact, the first transaction where we saw a combination of transition use of proceeds, so transition projects and expenditure, combined with sustainability linked structure. And that's something that I think we're going to see a lot more of. And in fact, we see a lot of investors very keen, very supportive of that particular element, because they view this as much more impactful and showing a lot more kind of progress towards sustainability. To put it a bit sort of simplistically, it's very much putting your money where your mouth is. Not only are you saying you're going to spend on these things, but you're going to spend on them and deliver those targets that these things are actually meant to do. And if you don't, then the terms of your financing will change. And this isn't something new for the region. Adwan mentioned this for DP World's RCF that they closed back in 2018. Again, another one I feel very privileged. And the two things I want to talk about are ones that we were able to play a lead role in structuring. And this was great because it really showed that for the region where, as you've mentioned and as was mentioned in the panel before, there is this sort of this base in hydrocarbons, but it shows that there is this mindset where you can work to transition, where you can work to improve and to meet those targets, which for me is in fact probably more powerful than just doing a little bit of renewables here and there, because this is about really systemically addressing your entire business model and shifting that towards a more sustainable and kind of climate friendly scenario. So in terms of what sectors, I think we're going to see a lot more of those heavy industry type sectors. Renewables, real estate. Ibrahim is obviously a great leader in the real estate sector for the region, and MAF has done some amazing things, and I'm sure will continue to really innovate in sustainable finance. But I think we're going to see a lot more from the kind of the typical regional champions, the oil and gas companies, the heavy industry companies, as technologies emerge like hydrogen. I've seen the Hydrogen Alliance between ADNOC, ADQ and Mubadala, Siemens and Mubadala doing some work in that space as well. And I think more of that's going to happen, as there's a lot more where these companies actually have the knowledge, the technical knowledge, to be able to kind of drive that transition. But underpinning this, and I think it's something that Ibrahim summed up very nicely, is the fact that it's not just finance, it's the alignment of the strategy, more focus on reporting, and the SCA recently sort of made it mandatory for listed companies to issue sustainability reports. And I think that entire shift in strategy, understanding how important ESG is to your business model, and wanting to tell people about it, whether that's through a report, through an ESG rating, is going to be crucial to what actually drives this market in the next couple of years.
Thank you. And I think it's important to note that ESG isn't there for specific sectors. It's actually open for everyone, and whether it's the E, the S, the G, any kind of business can look into ESG and start using it. So the guide talks about three particular sustainable finance products. You've got fixed income, loans, and equity. Regulators are becoming more supportive to sustainable issuances. Here in Dubai, the DFC has issued the Green Bond Best Practice Guidelines, and ESG has come out with their master plan for sustainable capital markets. I want to hear from our panelists about their experience in the different sustainable finance products they've dealt with, and whether there really is a growing demand from investors for ESG related products. We heard from the previous panelists that there is, but from an issuer's perspective, I'd love to hear the views. Let's start with fixed income, since as a leading fixed income listing venue in the region, we at Nasdaq Dubai are seeing more and more interest from issuers who are looking at ESG related bonds and Sukuk. We had the first green Sukuk list with us in 2019, and since then have had 8 further issuances list, 6 of which are Sukuk. Ibrahim, 2 of those green Sukuk were from Majid Al Futtaim, with a total value of $1.2 billion. And if I'm not mistaken, you were the first corporate to issue a green Sukuk. Can you give some insight into these 2 Sukuk and fixed income projects in general? Because this is one major focus when it comes to sustainable finance. And as Sandra said in the previous panel, we can see a lot more from the fixed income market when it comes to ESG.
Thank you very much. Yes, absolutely. I will start maybe with the second part of your question about investors. There is absolutely higher demand, and we've witnessed that when I did the roadshow in late 2019 for the Green Sukuk. We've witnessed a lot of high demand from investors. That's why, for example, we are joining the TCFD supporters network. TCFD is the task force on climate related financial disclosure. So as part of that, I work very closely with the Treasury, my colleagues in Treasury, to look into products that we can use for sustainable finance and to cope with the high demand we have from investors on green sukuk. So for us, the journey, I think it was a turning point for us from a sustainability perspective, because it is where the official and the platform where the finance team, treasury team worked very close with the sustainability, and we looked at our rating and our ESG rating. And this is where we looked at Green Finance Framework, we looked at third party, we worked with Sustainalytics, MSCI, and we started looking at different ways of reporting and enhancing our ESG rating. So from experience, I think the E was very close to us. We started to close the gap on the S with the diversity and inclusion, with other remarks as well. We as privately held company, I think we have good governance. We need to work more as well. But did it have access to capital? Absolutely. We have, other than the bonds, for example, this helped us to do a good refinancing project on a green mall in Egypt with EBRD and with Emirates MBD as well. So we believe that ESG will be one of the main products to access capital, either from investors or internally, or even our own trust. It's a good way of engagement with our investors. We need to report back on our ESG rating to our investors, as well as enhance the rating we have from ESG. So this is a great example of doing well by doing good. And even during these times, if people think of a slowdown, I believe when it comes to green sukuk with fixed income or fixed profit, fixed income bonds, green financing or sustainable financing can be one of the first low-hanging fruits to tackle from a treasury perspective and from sustainability perspective. So this has been for us a great challenge, and even pushed us to be the first company that with WEF, with World Economic Forum, to sign the framework on stakeholder criteria and stakeholder capitalism criteria. And for me personally, and for the company, that was a bold move to start for a privately held company to commit on disclosing more and extra data on their ESG rating as well. So there is a high demand. Our next step will be, it's in progress on TCFD, integrated reporting, absolutely and for sure, and even working more in closing the gap on the SNG and the ESG part.
Excellent. So Ridwan, we interacted a lot when DP World was a public company, and I know you and the team were very heavily involved in interacting with investors. We're seeing more and more listed companies adding ESG reporting as part of their annual disclosures because of the growth of interest from investors. We heard about the BlackRock's demand. DFM has published their Sustainability Strategy 2025, which provides ESG reporting guidance on voluntary sustainability disclosures. Can you not only give us an insight from the equities perspective and how ESG reporting is becoming a lot more common and demanding from an investor's perspective, but also from a loans perspective, since DP World was the first in the region to be involved in a green loan, if I'm not mistaken?
Yeah, so I think I can give you a good perspective, both from equity and debt side, really. And I think I'll echo what Ibrahim has said in terms on the debt side. Demand is pretty strong at the moment, really, across the board. I think a year or two ago, we were told you pay a premium because it's ESG and you want to make the world a better place and it's the right thing to do, right? And now it's you get a discount there, right? So because of the demand there. So it's interesting how that's evolved, really. From an equity perspective, I remember about 5-6 years ago, when I used to go to these meetings, and randomly I used to get asked a question right at the end of the meeting saying, I need to ask you a couple of questions about ESG. And that evolved over time where there was a lot more interaction really. And I think we saw that quite early. And what we did was we participated in something called the Dow Jones, I think, Sustainability Index. And they go through a whole kind of system of structure where they ask you questions. I think through that process, we learned that we needed to collect more data, improve our reporting, and we, although we were doing a lot of these things, we were not collecting a lot of that data really. So we learned to do that. And then eventually, I think we qualified for the Emerging Markets Index for the Dow Jones side. And I think we were the first company at that time, the only company in this region to be part of that index there. So I think that was very interesting. And then it kind of evolved to a stage where a lot of the equity investors will say to us, look, I can't invest in you unless you have XYZ reporting really. And I do remember a European organization that came to us and they said, we had a whole hour's meeting purely on ESG. Not a single question was asked about finance and return on capital or strategy. It was a 1 hour meeting purely on ESG. And they were a index investor. And they said, what we do is we invest in the index, but if your ESG is not acceptable to us, we will take you out of the index. You lose capital from that perspective. So I think there's a whole paradigm shift in terms of the whole ESG. And I think a lot of it is, a lot of companies obviously believe in ESG, but it's not, it can be quite complicated to actually collect all this data. And I think what Ibrahim said is, you've got so many different parties really, and I think we'll go on to the challenges really. So many different organizations that collect and publish ESG data, and it's very, as a corporate, it's very difficult to know, do I go with the MSCI, do I go with this guy, or do I, and then now all the asset managers are sending their own questionnaires in, so it becomes quite a lot of work as well involved there. So I think, yeah, it's just been a complete complete shift in approach in terms of ESG, and we've seen that happen over the last 5 years really, and demand now is a very different level. I think the what feedback we get is the millennial investor, the pension fund, they're saying, look, I want my money to go to a company that takes ESG seriously. So, and the feedback is, look, if I need to take it seriously because my investor's taking it seriously. So the world has changed. So I think that's where we are with it.
And as you started taking it more seriously and started doing a lot more ESG reporting, did you see new investors coming and approaching you?
I think it's difficult to know if they were just new investors because it's ESG. But yeah, I think we do attract a lot of people who are looking at kind of ESG investing and want to come and see us, want to come and meet us. So I don't know if that was a result of us kind of having that approach and having the structure in place. Or it was just because we were doing, or the market was just growing really. So it's difficult to really pinpoint and say what drove which part of that demand.
Okay. And Oliver, you're involved in many different types of products for your clients. And although the guide only talks about fixed income loans and equities, there are opportunities to incorporate ESG into other products, financial products. Do share some thoughts on the products Ibrahim and Ridwan have spoken about, but what I'm really interested to hear is other alternative sustainable finance products you've worked on or are looking into, if you can share some details on them.
So I think, I echo everything that Ibrahim and Ridwan have just said. I mean, they kind of are obviously the ones that sort of are really kind of feeling this change with all the stuff that they're seeing where and how investors are interacting with them. And I think very much this is a paradigm shift, and it's something that we definitely see where not just when we're bringing a transaction to market, but when investors come to us and they say, this is what I'm looking for. It's no longer oil and gas infrastructure assets. They're looking for low carbon transport in Ghana and affordable housing in Kenya and things like that. And in the region, definitely the same shift with a lot more kind of how can I support this renewable energy growth that's happening. And I think both companies are great examples for everybody in terms of communicating very strongly on the strategy and then translating that into the finance, which is obviously key to the success of those instruments. And the bond and loan market is the one where you make the headlines, you get the attention, there where the big deals are done. And it is key. It is definitely key to getting that financing, and the equity market as well. Standard Chartered is not really in the equity market, so I won't speak too much to that. But for me, the real change is not going to happen when you just have those big ticket items. It's when the entire financial system can integrate sustainability. So for Standard Chartered, the core of what we do, where our history comes from, is trade finance. We are a trade finance bank. That is where our roots are. And that's why we're really excited to have very recently launched a complete sustainable flow trade offering. This is very exciting. It's one of the first propositions of its kind globally. And we are really excited to work with our clients to actually structure these solutions. There are a number of clients already speaking to us on it, and many more that we're going to, I'm sure, be speaking to over the coming weeks, and hope to be closing some interesting transactions very shortly in the region. But what this will really do is support the way, or transform the way, in fact, that we support our clients to meet their sustainability objectives and transform their businesses. So this can allow us to actually integrate sustainability criteria into supply chain financing. So for example, vendor prepay structure is something that the region's caught on to recently. We've done a lot on the conventional side here, but we can actually tie the terms that you give to your suppliers to their ESG performance. So your entire supply chain will be more sustainable because you're actually incentivizing your suppliers to meet those different ESG criteria. And that's going to be transformational, in my opinion. But we can also actually use this offering to support the underlying trader products that are either those that are more sustainable versions. So for example, Better Cotton Initiative certified cotton, compared to just kind of conventional cotton. So, that's looking at, the land use, the water use, the emissions, that sort of thing. Very important to look at the underlying quality of that commodity, or for products that are actually helping to drive the transition. So for example, the components of a solar panel, ensuring that we can get sort of dedicated trade flows for that. And that will be through products such as letters of credit, guarantees, invoice financing. So it's really exciting that that's going to be launching. I think that's or has launched, in fact. I think that's going to be transformational. We're also looking at what we can do for the sort of broad range of financial market products, so derivatives, hedging, that sort of structure. And I think there's going to be a lot more that we can do there. And we've seen a few things start to be there, but I think we're trying to really address a holistic solution that's not just a one-off product, but a whole range. The other one that I know you and I have spoken about before is fund finance. And I think listening to what the investors have said on the other panel, this is something that's great. And we were able to sort of pioneer a bit last year, including the first ever use of proceeds subscription finance facility in the US for KKR's Global Impact Fund. And so what this is either providing financing that can only go towards sustainable investment. So you actually are producing capital that is dedicated towards those areas and allowing those sustainable funds to access that capital. Or you can actually tie the terms of the transaction to the overall sustainability of a fund. So for example, if you meet a minimum amount of your investments that are green, or if you're a green fund or a fund that wants to be green and none of your investments are not green, you can actually improve the terms of your financing based on that. And that obviously is, again, really helping to incentivize these investors to go after this capital, which we've heard, they're clearly looking to do. Their stakeholders are pushing them to do that. And so this is helping them to actually go after those opportunities and really drive that shift.
Okay, good. And Oliver, I want to stay with you and ask you to share some of the challenges you've come across when looking at ESG related transactions, but also the opportunities they bring. We've heard, from a pricing perspective, you have benefits. But what advice would you give to companies that are starting to explore the space of sustainable finance?
I think for me, the first thing is don't take a sustainable finance transaction in isolation. That is the first piece of advice. Take it like MAF and DP World have done as part of a more holistic sustainability strategy, because that will resonate far more with investors. That will be much more, what they're looking to do, looking to support, because they don't just want green use of proceeds in isolation. And we heard this from the investment panel. They want green use of proceeds, green transactions in line with a sustainability strategy. And that's something that Etihad had done a lot of work on, and was why that transaction was so well received, because it made sense in terms of their broader sustainability strategy. So, one of the ways you can do that, and we talk about this in the issuance guide, is get in place a framework before your transaction and actually get that understood. Now, DP World has never issued a sustainable bond, but they do have a sustainable finance framework, which tells investors what sort of things they view as sustainable activities. And this is a great thing to do. And we work with a lot of our clients to actually do that, get that in early. And we then take them on non-deal roadshows to meet investors and just talk about sustainability. Park the credit discussion completely, talk about sustainability, what it means to you. Another way that you can go about sort of building that up is through ESG ratings, something we've seen a lot more interest in recently, and something we're working with a couple of our clients to actually, first of all, obtain them, but then how do you improve them? Because so much of the time, the reason your rating might be not as good as it should be is not because actually you're doing anything wrong. It's because you're not disclosing that in a way that the rating agencies pick up. And so there's a lot of kind of understanding what they're looking for and speaking to them and making sure that you're addressing things in a way that makes sense, and perhaps educating them on something where you're doing it, but it's not. Maybe it's described in a little bit of a different way, because obviously that's where the regional sort of twist on things kind of comes into play. And then my final thing is really on reporting, making sure that once you've actually done that first sustainable finance transaction, your reporting is credible and really meaningful, so that when you go for the next one, people understand what you did previously, they can take it seriously, and they can also benchmark it against something.
Very good. And Ridwan, to you, if you can, share your experiences.
In terms of preparing for ESG?
Well, challenges, benefits, opportunities.
Yeah, look, I think
well.
the challenges are definitely there, in the sense that I think a bit like what Oliver mentioned is we've got ESG ratings from various parties. And we've got very high scores, and then we've got some scores which are not so good, right? So, so some investors look at different ratings. So there's not a common ground here at the moment, really, and that's quite frustrating for us at the moment, really. So, so we're trying to work with MSCI to improve the rating, whereas Sustainalytics, we're as high as we can possibly get to. So that's frustrating, really. There's a gap between how these agencies kind of work out their own rating for. And then what we have also is, as I mentioned, you have investors who don't look at these ratings. They want their own ratings. So they'll send me a questionnaire which has maybe 30 questions on there, which are it's not straightforward. So we need to go back as a team, work on this together, and put that back, because they are working out their own scores, really. So I think from a workload perspective, there's a lot more work, and it takes a whole team effort to get this right, really. And I think collecting the data, making sure you have targets, and so yeah, it's a lot of work, a lot of effort, but the demand is there, right? So it's, in a way, it's a good thing, because ultimately, as I mentioned, as a corporate, we believe in this ourselves. We want to improve ourselves. So in many ways, if the clients are pushing us to kind of improve our scores, the way we report, in the long run, it's a good thing. So we're willing to put the effort in, but there will be challenges along the way, to be honest, really. And I think the demand is definitely there, both from an equity and from a debt perspective. So I'm sure it'll be worth it in the end.
Good. And Ibrahim, do you agree? And have you seen that the challenges you had to go through, the efforts you had to put in, did you really see the benefits from your issuances that you did?
Yes, just to add to what Oliver and Ridwan greatly mentioned, I would like to share two things here. One from as a sustainability practitioner maybe, and one as from a math perspective. Well, we have two ratings. We have the MSCI, we have Sustainalytics. Sustainalytics, we are low risk, and MSCI A. And MSCI, they come just what is publicly available data. So my advice to everyone listening is it's not about how great rating you are from the first time, but it's how transparent you are. And that's important. If you're transparent and you have a holistic approach for your sustainability approach and your business and the embedment of sustainability in your business, I think you've done most of the job. The rest will be, as Radwan mentioned, it's a teamwork. It's like any other job. So it's not something extra or something, it's a smooth riding. It's a business, it's work. It's you're looking for, you're tackling access to investments and to capital. And this is what you should do. You should do the homework. But you know what's the main challenge, I think, for sustainable finance or ESG in general, that it's not yet the norm. And that's the important thing. We've been living a pandemic before COVID-19, and climate change is a pandemic. The new norm that maybe some of the companies and even some of the investors in our region don't confess of it yet, the new norm is not to be environment friendly, but to talk about net zero. And net zero, you need investments in infrastructure, you need to change of mentality. So if the new norm is ESG rating and sustainable finance, and then the rest will be history, because this is how, if you talk about good business, this is the good business. You need to take care of the environment. You need to have social targets as well as a clear governance to ensure economic stability for your company and for the economy in general. So sometimes you don't look at people don't look at it from a helicopter approach, and as Radwan mentioned, a holistic approach, or Oliver mentioned, a holistic approach, and that's a main challenge. That's nice. That's not a nice thing to do. It's the core of the business, and that's the main challenge. I would hope to see ESG as a main prerequisite for a lot of transactions here. And you've seen DFM, ADGM doing a lot of great work, creating and sharing a lot of knowledge. So we don't have an issue of know-how. The know-how is publicly accessible and available. It is the way we look at these things. So I hope it's better late than never, but the main challenge, I believe, so far is we don't have many transactions showing the impact, the socioeconomic impact, the good positive impact to this transaction, to the different stakeholders. And that is the main challenge. We need to talk more about this. We need to have it as the trend. As I've mentioned, it should be the new digital, it should be the new norm. So that's the main challenge I look at it, at least in our region.
Okay, good. And that takes me on nicely to my final question. And we are running short of time, so please, very quick answers on this. When we look at the world map on page 2 of the guide, it shows the total issuance volume for supranational entities since 2007, with a total of $257 billion issued globally by these entities. Dubai leads in the region, but overall, the region lags the rest of the world. What can we expect in the region going forward? Will this space grow as much and as fast as we've seen in other parts of the world? And Ibrahim, if you want to add on to what you've already been saying in the previous question.
Well, I very much hope so. Our region showed resilience. I think if something we learned from COVID-19 for the UAE and the region is resilience and agility. We showed agility and we show resilience, and we can catch up. So I would believe that we would see more of that. Again, I will refer to the great efforts done by DFM and ADGM to promote for this. I would see more transactions. I would see even the interest of the government to support that and the templates. And the fact that you had this event today talking about ESG and sustainable financing is a great example. So I just hope our region will catch up. I hope there will be more political will and more regulations to make it easier to do such transactions.
Very good. Oliver, your thoughts?
I think we're definitely going to see that bit of the map start to move towards the colours that we've got in Europe. I think that is inevitable, and also a really good thing. I think Ibrahim's point about kind of the sort of versatility and the adaptability of this region is crucial. I think it's a region which understands trends and picks up on them and works out what they mean for the region, the companies here, and then actually capitalizes on them. I know personally from my conversations, there is so much more interest in going down the sustainable finance route, with issuers looking to understand every single one of those different elements that we've laid out in the guide and what they actually really mean. And I think that definitely conveys or will convey into a greater volume of transactions. And the other thing we can't forget is that it's not just more driven by the issuer side, but it's also what the investors want to see. As we've heard from the previous panel, there is a real desire to invest in this area. And that is going to also kind of help do it, because if investors are asking for something, then companies are going to meet that demand, because that's what's going to get them the better terms for their transactions.
Good, thank you, Oliver. And Ridwan?
Yeah, look, I just to finish off, really, I'll say that definitely I think there's going to be a growth in this side, really. From a DPO perspective, I think we would have done one already had it not been for time constraints. I think you go back to kind of conventional and sukuk because you've done it in the past. I think once you've done one, you will see a flurry of these, really. And I think once the US dollar market really gathers momentum there, that would have a massive impact on this region, because obviously the kind of the currencies are more pegged to the dollar, really. And whereas at the moment the demand is very, very high on the European side, the Euro side. So I think once that kind of there's a shift change happens, I think you will see a much more of a flurry from this region also.
Good, thank you. And look, we do have some questions. Unfortunately, we won't be able to answer all of them, but I do want to at least cover one question, and maybe I'll stick with you, Rizwan, because you've gone through this process. And the question is, how do you improve the reporting and monitoring mechanism of green bonds, sukuk financing, essentially ESG? How can you improve the reporting and monitoring? Or maybe if I put this in a different way, a company today who's not involved in ESG reporting or sustainable finance, where do they start? How can they start?
Yeah, look, I think the first step is you can actually work with some of these advisors on the ESG side, right? Sustainalytics, or even the banks like Standard Charter can be very, very helpful. Ultimately, what it comes down to is an internal structure, collecting the data, reporting the data, and that probably means some sort of kind of change internally in terms of how you go about doing this, really. So I would say that it does take a long time to get there. So it's not something that you can do overnight, and it means that there needs to be a real kind of repositioning of how you collect data and report data as well. So I think you definitely need help from an advisor, be it in that market or through kind of a banking relationship that you may have. I think all banks now have ESG advisors on board also.
Excellent. And I think what we've heard today from both of the panels, if you're not already looking at it, I think it's very important as an organization for you to start looking at ESG, whether you're public, private, or you're looking to raise capital or you don't need to raise capital, is something which, as Ridwan just said, can take time. So it's very important to start looking at ESG early. Ibrahim, Oliver, Ridwan, it's been a great pleasure having you with us and hearing about your experiences. Thank you very much. Ladies and gentlemen, I hope you enjoyed this session. Thank you for joining us. I'm going to pass you back to Christian for the closing remarks. Over to you, Christian.
Thank you so much to all the panelists for this very, very insightful session. I definitely learned a lot. Maybe we're at the end of the webinar, so I wanted to summarize some of the key takeaways. We started the webinar with Arif's keynote. He made it very clear that sustainable finance, ESG is a priority for the DFC, for DFM, for Nasdaq Dubai, and for Dubai in a larger sense. And this working group that produced the guides is evidence of that. We heard Marie talking about the gap in investments or in financing of in order to be able to achieve the ESG and the SDGs. At the same time, we see exponential growth now also fueled through the pandemic of more people investing sustainably. I think in addition, it was very interesting to hear the CFO Task Force that the UN Global Compact has helped put together, and that will further help drive and direct investments into plugging this gap. And then I definitely was very interested to listen to the first panel and understanding what sustainable finance actually is all about. I think it was very well described as meeting the needs of today, but not compromising tomorrow, not postpone the problem, and make sure that the capital growth is in line with where the world will be in the future. And I think lastly, investing in sustainable finance is something that is at the core belief-based, and that's something that we in the region already know quite well. So I think that there's a lot of growth and a big trajectory ahead of us, specifically also in this region. And lastly, I think on the issuing side, I think it was very interesting to learn about that sustainable financing is a joined up approach that combines strategy, decision-making, policies and practices of companies. It really aligns the strategy and is at the core of many of the companies. However, obviously there is a growing demand. I heard sustainability will become the new digital. And I think that's obviously also demand driven, and the fact that there's more and more regulations enabling it. But also, I would say once you went through the first issuance, it's not a simple process. So going through it once, learning how to get there, working with the right partners, and hopefully these guides that we issued today will help as a starting point is important. But once you've done once, I think you went through the process once, it's much easier to do that regularly. So the last takeaway for me was ESG is not for a specific sector. It's for all sectors, and it's for all types of investors. And I want to leave that as a last point with you. And I hope that you will explore more of that. You will be able to find the guides on the website of DIFC under the DIFC newsroom and under the link of publications. And this is where you can download them. And you can also email the working group under sustainability@dfm.ae. Thank you very much for joining this webinar today. Have a wonderful day.